How you guys doing? I hope you're doing fine. I'm doing a fast video for market brief for my Goombas, my friends, from my Polish cousin. Yeah, they say Polish people are very smart. Yeah, that's why I, I have. Yeah, it's okay. Oh, all right. So let's talk about the market now. Forget about the pulls. Anyway, this is the Dow Industrial. This is the Elliott wave theory. 5 waves down, corrective wave. So, and after that, we started with five mini waves down, constituted 1 and 3 up, 2, and now we registered for 3 right here. And this is the worst close since at least since July. We say, yeah, since July, late July. So what does that tell me? According to Elliott, the move is gonna continue down with some corrective waves up. So it's registered the first place of buyers. Sorry, this is the 200-day moving average. It will find buyers, even for 5 minutes. A lot of people are gonna buy from here. If you want to short now, stop it. It's stupid. Don't do it. A lot of buyers are gonna go and step here. Okay, so volume analysis, distribution, 2, 3, 6, 8. That's not a real distribution. So 8 obvious, clear ones. Distribution started in June, and it is below June's high now. So the distribution is real. So this is the Elliott wave. Let's look at the Fibonacci extension of this break of this low. So we do this number right here. Goes like this. See how easy it is. Technical analysis is really for dummies like me. So a really reasonable target is going to be, shoot, let me do it again. Told you, I'm a moron. I'm crazy. Deranged. Okay. So, see how I'm not really a genius at all. See? So, a reasonable target is 23,300 right here before a really good corrective wave up. Okay? So, you're going to have corrections along the way here, but a real bounce is going to start here, 127 to 162. Okay? And if this is the real third wave, so we might go all the way to here too. So we're not gonna speculate the future. I'm just saying now we are in a breakdown mode, and we are breaking down. That's for sure. Okay. So registration of third, a possible correction, and the buyer is gonna step in here. Let me run Fibonacci retracements. Hopefully, if someone is shorting, even though I don't like shorting, if someone is shorting, I'll really want them to know when to be careful to cover the shorts. Crap. Shoot. Okay. Clumsy. That is me. Okay. So these are the places of buyers, and you can see this is a place of buyers too. This is an old resistance, became support right here, and so on and so forth. Please pause and look at it and watch out. Watch out for this. Watch out for this. Watch out for this. Watch out for this. Good deal. So this is the Elliott wave. So This is the Bollinger Band, using Bollinger Band. So it's a confirmation. If the price closes outside the Bollinger Band, that's a confirmation of a continuation of the downtrend, and the Bollinger Band is going to expand. Okay, and stochastic is at 8, which shows real weakness, and RSI is very low too, which shows weakness too. So the least of path resistance is down. Yet we have to be careful of the 200-day moving average. Okay, so we go into oversold now in the RSI. So that shows weakness, but you never know when the buyers is gonna step in. So usually when you go to this low, you have a bounce back like this one, and a test of the stochastic. And sometimes you have a bounce back like this one, and you stay oversold for a longer time if the selling pressure continues. So this does not mean a bounce. This is negative. That means the strength is weak, and this is not oversold. Some people do the contrarian view, and it's oversold. They short or whatever they buy, but the real purpose of it, it shows the strength. Usually it does not last oversold for sometimes, like what I stated here. It did not last overbought for sometimes, but still, nevertheless, it's bad. So now all we do is try to find where the places of buyers. Okay, so we be careful, and as I said earlier, I can state it, I can do it like lines, so you be careful, guys. So this one right here, pause. 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 This definitely going to be places where the buyers gather, and so on, so forth, here, and you could use the Fibonacci extension, like what I did earlier when I wanted to measure the wave, the down wave. We could run a Fibonacci from this high to this low and see 121, 127, and so on and so forth. You could, if you want to short, you must know where the buyers gather. Okay, as I said before, it's all about supply and demand. Good deal. So conclusion for the Dow, it's weak. Not very bright people buy now. It's in breakdown mode, and if you buy now, that means you really are playing with fire. So please don't buy. If you shorten, please know where the buyers gather. You could buy here the 200-day moving average, but in very small increments, because there's no confirmation. You're assuming that the price action will bounce, and please don't do this assumption. You could have got burned here. Look, you're assuming the 200-day moving average is gonna hold. It did not hold here. See, and boom, it kept going up, down. Then it became resistance. So I really want you to understand catching a falling knife. So this is the Dow. For the dollar, the mighty dollar, it broke the downtrend line. So it broke it here, and it found support here. And now we are going through an up move, as I said before. And this is the 10-day moving average, and the price action is above it, where it tells me the price is going to go up, and the RSI is above 50, which shows a lot of strength. And as I mentioned 2 days ago, the beauty of this divergence, the price action and the stochastic, and I said it's above 20, which shows buying strength. And usually history repeats itself, the price expands to the upside, and this is what happened, and it's going to continue to happen because of this number. Now what we do, we run a Fibonacci retracement from here to here, and we try to find where the buyers gather. And I said earlier, and this is okay, this is the dollar, the Elliott for the dollar. as I said it earlier. But the dollar, the UUP is the dollar too. So please, I'm really sorry. I was looking at the UUP, which is the dollar index. Silly me. I'm really sorry. So this is not updated yet. So I'm trying to find the Elliott one. I did a fast video. That's why I'm really not organized now. I really wanted to help people that want to be helped. Okay. Okay. As I stated the other time, this bad boy, and now we're breaking above it, and we register in the third wave up in the DXY USD. So it comes together with the market. Third wave down there, third wave up here. And even though some Elliottician thought they will have another bottom, this is the beauty of Elliott wave. You are independent. You could have your own count as long as you don't violate any rules of Elliott. Good deal. Okay, so we talked about the dollar. Bullish on the dollar, bearish on the market. Third wave in the dollar, third wave down on for the market. Apple now is at the lower end of the Bollinger Band. It broke down in the Fibonacci retracement of 62% from this low to this high, which indicates a testing of this low at 103. So this is bearish according to this cloud study. We are in a long-term correction because we closed below the cloud, and it's red here, and here the cloud would tell us it would be neutral. Now it's telling us to sell. And also the Bollinger Band is opening up in a way it's not offering any support right here, and you closed at the lower end of the Bollinger Band. So bearish on Apple because of the cloud study, because of the trend line. We broke this trend line, and because this is called continuation. If you broke below the 62 Feb retracement, that means you're going to continue to the downside. The probability of bounce back diminishes. Now we're going to have the 76%. Feb retracement to 89. Usually when you go as low as that, it's good when you are in a very down move, so you could assume a second wave is coming, but you are on the close to the top, so there is no second wave here. This retracement is an indication of continuation to the downside. It's not like when it was here in relative of the bigger picture. Okay, good deal. So bearish on Apple. You could rewind what I said about Apple, and you could see it yourself. Why I'm bearish on Apple. This is Tesla from my. Okay, Tesla is the same, and also Tesla, the Bollinger Band is tightening, which indicates extreme volatility. See, if you think this 4% is not volatile. With Tesla, this is volatile. So extreme volatility now, which most likely it's going to go down, especially when you have the MACD going to sub-zero very soon, and the stochastic is going to oversold. When the two lines here in the stochastic go down together, for sometimes the strength of the price action goes down, and it's easy to sell than buy, so the selling pressure might continue. So what do you do here? Run a Fibonacci retracement from here to here and see where are we, from here to here, from here to here, and see where the price memory is. Boom, boom, boom. And you could apply also the moving averages, the 10, 20, 50. You do the weekly, and you do the weekly. You might find support in the weekly time frame with the moving averages. Good deal. So my Polish friends, okay, he wants oil. Let's look at GDX. You know what? I'm gonna upload this one and do another one for gold. Huh? How you like them apples? My Pole friend. Love you guys, and this goes forever. Please share, like,